In this video, I'm going to give you a tool, and it helped me build my Airbnb business, which is currently worth more than $4 million. I built it in less than 4 years, and I started with less than $4,000. So, let's jump right in. Welcome back, Airbnb family. So as many of you know, I did start my business a long time ago with very little capital to start with in Houston, Texas. I started with just over $3,000. And today, I'm currently in Dallas, but I've been expanding in Philadelphia. We're picking up 15 properties. We're halfway done with those, and we're on our way towards 100 properties, which is going to be an excellent year. So with that said, a lot of you wonder how I do this without taking on debt. I don't have multiple investors who share my equity. I don't have some big bank loan. I've done this all bootstrapped, and I started with $4,000 4 years ago. And there's one key aspect to how I run my business that is going to help you supercharge your growth so you can get up to this kind of level much faster without having to borrow money from people. And there's a concept, actually a couple concepts here, I'm going to walk you through. But first, let's talk about the valuation of a business, because as you guys know, my business makes about $2 million a year in revenue. But why is a business worth $4 million if it only pulls in revenue too? Well, so the way you can evaluate a company is a multiple of its gross earnings. You can also do a multiple of its net income. And so we're going off of net income here. The hotel sector typically takes a 6.5 to 7.5 multiple of its net operating incomes as the valuation for the hotel business itself. So in my case, if you have a property portfolio like mine that would net $40,000 a month, well, that's $480,000 a year. You multiply that by 6.5, and that would be the income or the value of your company. So if your company's making $55,000 a month, then you just do the same math, and you're at like $610,000 a year times 6.5. And that's how you would evaluate your business. If you ever wanted to sell your Airbnb business, you could sell your LLC with all of your leases and sell it for a valuation like that. There's other considerations there too, but this is kind of like a fast valuation tip. If you ever wanted to know how much your Airbnb business is worth, there you go. So moving on though, we're talking about growing our Airbnb business to be making millions of dollars a year, to being worth all this money. How do we do that? And how do we do that alone? So there is one concept I've already talked about in previous videos, which is the velocity of working capital. And what that is when you invest money into your business, how long does it take for that money to come back? So let's say you're in the retail sector and you sell shirts. Well, you're going to buy a bunch of shirts wholesale, put it on a rack, and you're going to sell off your shirts. How long until you get your working capital back? And in the retail sector, it can be a while. Here in Airbnb, you pay rent, you buy furniture, you list it, and that money tends to come back all within about 5 months because of profit, and you have paid your 6 months of rent and are operating in the black, usually going into month 6. Of course, depending on the market and depending on your property and how well you host, you can do better than that, but that I think would be a good average. So you should expect to get your money back within 5 months. But that is looking at all of it, right? You're looking at the $4,000, $5,000, $6,000 you paid for furniture, and let's say you're paying $1,500 a month in rent. It's taking into account that you're spending that $1,500 a month as an expense. But what's strange about this is most of those expenses come the first of the month, but you have money in your pocket the 10th, 15th, 20th of the month, and you're getting it on Airbnb. Airbnb pays you on a semi-daily basis for all of your reservations. So what do you do with that capital that's sitting in your pocket? Do you just save it till the first, pay your rents, and then take your profits and then reinvest your profits on the first? No, you don't. You put it to work. And in order to put it to work without taking too much of a risk, you need to know how to make a financial projection. And that projection is going to be what you think you're going to revenue on Airbnb for the month. So you know right now you have cash in your bank account plus your projected amount of cash that Airbnb is going to give you minus your expenses at the first of the month. How much money should you have left over? And you can invest money that you're collecting on the 5th or 10th of the month and spend it on growth 30 days earlier than a normal person would. A skittish person would wait till after they paid their rents. But you do it before, and as long as you meet your numbers and meet your projections, you can actually have that money you just invested on the 10th make you more money before the first even comes. And I'll give you an example. So Let's say you open up your performance tab on Airbnb. It's going to give you all these things like your occupancy, your ratings, your earnings. Well, click on earnings, and you're probably going to see this 503 byte error because Airbnb's been doing some work on their website and they've got some bugs. So go up to the URL and delete earnings. So it's going to say airbnb.com/progress/earnings. Delete the earnings and reload the progress URL. And then, once that reloads, then you can click on earnings, all right? Because this is how Airbnb's been working lately. Sorry about that. So, no matter how you get to your earnings tab, you want to take a look at how much you've made for the month. Normally, over the last 6 months, I'll kind of give you some numbers. We could, say in February, we had $28,000 in bookings on the 1st, I believe. And from the 1st through the 10th, we got more bookings for the month of February, and we had about $60,000 in bookings by the 10th, right? So 28,000, 60,000 on the 10th, continuous new bookings, and we hit about $100,000 in bookings for the month of February by the 20th of February, right? So these are same month bookings. By the end of that month, we were somewhere between 115, 122,000. I'm trying to do this from memory. And so February is a slow month, and we did that much, which is nice. But other months, let's say we started with 38 or 40,000. We hit $100,000 for the month on the 10th, and then $124,000 for the month on the 20th, and ended that month at about $141,000, right? So knowing kind of this arc of your booking pattern, you could say, it allows you to sit at the 5th or the 10th of the month and know how much more in booking revenue you should get. See, the reason why my portfolio performs this way is we have so many studios and one-bedrooms that most of our bookings are last minute. We also price our listings accordingly that our calendars are completely open so we can win monthly bookings, right? So you're seeing that we're getting $3,000 a month on average, or $3,000 a day in new bookings on average for a large portion of these days. So if you have the same type of portfolio as me, you'd see the similar behavior. But what you should do is don't take my word for my booking pattern and try to cookie cutter paste it on yours to make your financial projections, because that would be wrong. What I want you to do is just in your phone on a daily basis. Maybe at the beginning of the month, not so important. Maybe do it every 5 days. But on the 1st of the month, go into your Airbnb portfolios, if you have more than one, and total up all the revenue you have so far for the month. So 1st of May, right? How much money do I have pre-booked? And I think we have like $55,000 in bookings for the 1st of May, and it's not the 1st of May yet. So I put that number in my phone. 5 days later, look and see how much you have in incomes on the 5th. I would imagine that we would have about another 3,200 a day. So I would say that I'm going to guesstimate that if we had 55,000 to start with, we would be somewhere in the 72,000 mark. We might be at 75,000, something like that. Then the 10th do the same, 15th do the same, and then the 20th do the same. So every 5 days, put in your phone how much you have for current monthly bookings, and then the last 10 days of the month, I want you to take a daily tab. Right? You're going to notice that you get a lot of middle of the month growth if you're like mine, and then it tapers off at the end. You're not going to get $3,000 a day every single day of the month, because if you think about it, when somebody books on the 10th of May, they have a 20-day arrival window. As long as their arrival starts in May, you'll get paid in May. So if somebody books May 24th through June 30th, you get paid from May 24th through June 22nd, because they pay you for 28 days up front, right? If they book May 28th for 3 days, you get paid for the whole 3 days, or May 28th for 20 days, you get paid for the whole 20 days in May, right? So you can still make a lot of money in new bookings the last 10 days of the month. But once you hit now, it's like April 26th, people have to arrive the 27th or the 28th or maybe even the 29th for you to get paid by Airbnb that month, right? So I only have a few days left in the arrival windows. So my new booking revenue should be tapering off right now, something fierce. But the 21st, 22nd, 23rd, we are still getting $3,000 a day in new bookings, because all they have to do is arrive in April. They don't have to just only be staying in April. You can actually get a lot of your May revenue in April. Make sense? So what does this mean for you? You take a couple months where you start to identify the booking pattern in your city with your portfolio. You can, on the 5th of the month, take the couple months of data that you have and go, if I have $30,000, actually say any number, if I have X dollars in bookings on the 10th, I will have on average 70,000 more by the 1st of the next month, or I'll have on average 100,000 more. Or you might even notice it's a percentage, that I have 25% of my booking revenue on the 10th, and it's always 25%, and by the end of the month, I have 4x of what I had on the 10th. If you can come up with a pattern with the way that people book your properties and pay for your properties, you can take that pattern and you can take it to the bank figuratively. So, using this money, let's say you have $30,000 in the bank you can play with. You need to spend $50,000 on rent on the 1st, right? If you spent all $30,000 on new investments, you need $50,000 more dollars by the 1st. So if you can have a financial projection tell you that you'll have 90,000 in bookings by the 1st of the month, then you have safely $60,000 more in revenue. You can reinvest that $30,000 into new properties, and if you did that on the 10th and you can launch new properties quickly like I do and have them live within a week, you could actually have a few properties, 5 new properties, active by the 20th. And the fun thing about that is, let's say 3 of those 5 properties book for a week-long or longer stay, on the 22nd, 23rd, you have new revenue from those new properties. So that projection of 90,000, you might even make $95,000 or $100,000 by the end of the month because you reinvested that $30,000 on the 10th. And now you have more properties and new bookings, and now that growth allowed you to actually accommodate more expenses by the end of the month if you needed it. Makes sense? Things you'll need to consider is, for every property you have, you're going to have an increased cleaning cost. You're going to have more rents, you're going to have more electric payments, you're going to have more internet payments, etc. So whatever that cost first of the month was, let's say your rents and expenses were $50,000 for the month, you add 3 more properties, you have to add the rent, right? So your expenses could be $55,000 at the first of the month. So when you spend that $30,000 and you needed 50, now say you needed 55. So if you have that projection of 90,000, you should still be safe, but put that $30,000 to work quickly so you can make some money back on that. And so this is how I've continuously snowballed my profits into growing exponentially faster than somebody else could, because somebody else would pay their rents first, take their safe profits, and then reinvest their safe profits. I like taking some risks. I put all of my money into play, and I use financial projections to let myself know if I'm going to be overextending myself or if it's safe to reinvest a certain amount of money. I hope this is helpful to you, because if you're ambitious to grow a big business, you really need to know how to kind of ride the lightning, per se, financially. And I hope you all are well on your way to building your $1 million Airbnb businesses. If you have any other questions, I'll leave them in the comments. That's why I'm here. Thanks for watching Airbnb Automated. Go get it, and I will see you on the other side.